only I believe should be rejected. So this will be violated, otherwise not. And even it may so happen that there might be entries, there accounting entries correct, accounting entries may not be very correct where it should have been there. And also this cannot be reason for violation of this, which is held by the Pune Tribunal and the Bangalore Tribunal. Post 110/2009 registration certificate which was granted earlier, unless until not cancelled, will continue to be. So every year exercise, every 2, because earlier whenever you apply for the first year, you used to give, for the first time it used to give for 1 year, subsequently you used to renew for 3 or 5 years. So now every 3 or 5 years exercise has been no required. So we may always get that, because some certificates are issued prior to 2009. The clients may regularly refer that to whom the donation is received, they say aapka certificate expire ho gaya, now what to be done. You can quote this circular, give a copy of this circular to those persons so that they understand that again registration is not required. So in couple of cases it has been seen that people have applied for the ATG, again a post because the date was mentioned, and the commissioners have rejected it, and that rejection assessing officer has taken that view that now ATG you have lost it. And the tribunals, Bombay Tribunal especially, held that that rejection doesn't mean that they have rejected it, but they also give direction that commissioner should not have rejected it, they should have given the reason that this is not required other than rejecting the application. You have to make application in the form 10G along with the copy of registration certificate, notes on the activity of the institution since inception, copies of accounts, initially for 12A and ATGs they were taking single application. Some 5 years back they discontinued it. In Mumbai they discontinued it, but in Thane Commissioner was accepting it. Now again they have started from the 2014. They are taking both applications together. Once you file the application, generally you get the list asking you details to be submitted. Some of those details are that they want declaration from the SSC that there is no violation of the provisions under section 11, 12 and 13. All the conditions of ATG 5 are satisfied. The names and address of the trustee, PAN number of the trust and trustees. They require a list of donors, all about rupees 10,000. Mumbai they are asking for 10,000, Thane they are asking about 500 rupees. Then declaration there is no change in constitution and objects of the trust. Copy of certification of registration of the trust, certified copy of the trust deed, copy acknowledgement of return file if at all filed, the financial statements along with form 10B, audit report in form 10B if it is the existing. Once commissioner is satisfied that all these conditions are satisfied, he will issue the registration. The issues arise that the certificate act has been amended, but rules have not been amended, saying that it still is so for the prescribed, the certificate which is issued under ATG 5 will be there for prescribed period. That is not yet amended. The CBDT has issued a circular to that effect, circular number 2007 of 2010, saying that though the words are there, though the rules are not being modified, but this is not required. Again, NN Desai, Gujarat High Court held that the authority who is approving or granting certificate can act as the assessing officer. In the violation of investment under section 11(5), ATG can't be withdrawn or rejected. This is the one of decision that if the list of donors are not been provided, then that cannot be ground for rejection. So it may so happen that you may not have a whole detail of the donors at times. For the small donors, you may only know the name, or if you have some gift boxes where you kept on the shops, there also details are not available as such. So this can be handy for non-rejection of the application. Commissioner to pass within 6 months, and this is the example where say that period time taken for the removing the objections can be excluded for the purpose of completing 6 months. ATG, there is also ATG 2B, there is one more thing that the religious trust can be registered. When the religious trusts are of national renown or which has been notified as a place of historic, archaeological, artistic importance, they can be registered, and where you can ATG can be taken. In this case, the application is need to be made to DIT exemption, and DIT exemption will forward it to the CBDT, and application there is no procedure or no form is being prescribed, just to be made on the plain paper, giving the details of the particulars of the trust along with the necessary documents which you give for ATG normal can be given here also. And once the CBDT is satisfied on that, the notification to that extent will be issued, and they will grant registration under ATG 2. Now coming to 1023C. 1023C, there are a couple of sections, subsections which allows you to take a deduction under this section for which no registration is required, provided your gross receipts are below 1 crore. We will deal with here clause 4, 5, 6 and 6A, where the registration is prescribed. The rules to this are the 2C, 2CA and 55 and 56 are the form numbers. What are the associations or organizations to whom this can be granted? The charitable fund institution approved having regards to the object and its importance throughout the India or throughout the state. Trust wholly for public or religious purpose, or for public religious purpose, charitable purpose, approved having regards to its affairs of trust institution, administered and supervised, ensure income applied for the objects of trust. This 23C, 6 and 6A, they were earlier forming part of 1022 and 1022A, which has been covered here. This is where which will usually we will coming across the situations that institutions, university or any other institution existing solely for education purpose and not for the purpose of the profit as approved, and the hospitals or other institutions. So other institutions doesn't mean only hospitals, it even can be OPD also, for reception and treatment of person, but here the object has to be philanthropic purpose, otherwise it can't be granted. Application to be made to the Chief Commissioner or DIT exemption. Forms considered. Along with the application, the list of documents which are given, the trust deed, memorandum, list of major office bearers, photocopy of latest ATG, 2 copy of assessment orders, and 12A certificate, 12A or 12AA certificate. Earlier it was required that application was required to be renewed after every 3 years, and whenever you have to renew it, or make application before 30th September. But after the 1st December 2006, they made it perpetual, so every year renewal is not required, though the 14th provision still continues in the section. Condonation. Here there are again the contrary views are available. The section doesn't prescribe for the condonation. Neither says yes, neither says no. So the courts are taken a view that it can be condoned if application is not made within the time limit. This will apply now only for the first year, because my application to be made by 30th September. If I am making after 30th September, then I may not be entire exemption in that year. For getting registration at 1023C, it has been held that The registration at 12A is not compulsory. Even if I am not registered under section 12A, I can get the exemption under section or the registration under section 1023C. There are certain conditions which prescribe when I will able to get the registration. Because the condition what is prescribed under the 1023C and the 12AA, the 1023 is too narrow section, whereas the section 12AA or 11 there is a wider section which gives the blanket things, but it is only for specific purpose. Only specific institutions can get registration here. So education institution must exist. The existence has to be there. My sole objective has to be educational, otherwise I am not able to get registration here. It has been held that I am running institution is running a school, and that is for educational purpose, registration can be granted. The formal education in accountancy or account as authority has a control at which has been considered here, where the society which was applied for registration and they said that they are giving a loans to the students or needy students, and they themselves are not taking any other activity or educational. It was rejected that 1023C can't be there, but you can have under section 12AA. These are certain situations when it will be considered as that my institution is education institution. It needs to be affiliated to the university board. It's not necessary that I should get affiliated. I can have my private association organization and I can do this activity. Still I am entitled for deduction under 1023C. Earlier the benefits were many, but now this section is brought at par with section 11 and 12. Because earlier there was total exemption, total deduction was there. Whole income was exempt. But now the conditions, because all those conditions of section 13 were not there earlier. So as such, not major benefit. Here it was also held that in case of Christian, the way they run it, they also had a education institution, also a church, and they said that registration can be granted in 1023C also. Traditional education need not be purely traditional education, it can be others. When you are taking capitation fees, registration can't be granted. This is the last where we come to the hospitals. It says that if I am charging a fees, then that cannot be ground for not giving me registration here also. But my objective need to be philanthropic. Unless until I am philanthropic, I can't be getting registration here. I have been hurry up and I knew it, but if you have any specific questions which you not been covered, I have one question also, or we'll close it down. Yeah. Yes. Earlier, before the amendment, because in case of section 11, we need to spend 75%, now 85% of this fund, but these conditions were not there earlier, so my whole income was exempt earlier. That was a major benefit which we are receiving there. Yes, but now they have made it under section has been modified, they are saying that I need to file return and all those things. If anything on that, we can take offline now, same point. I'll just close with the small video, I have it. So I thought that I take it because post lunch session.
percentage. I figure 75% to you, Palma, and 25% divided between the 5 of us. Yida, Crowbar, myself, Tom, and the baby. That makes 5% for each one of us.
Billy, you're cheating yourself. If there's 25% divided among the 5 of you, that's 14% apiece.
Oh, no, listen, Pa. I wouldn't cheat you. You know I wouldn't. Now, look here. I'll show you. Let me rub this out here. And now, 25 divided by 5 is 5. You see, 5 won't go into 2, will it? No. But 5 goes into 25 5 times, you see?
No, you're wrong, Billy. Now, I'm pretty good mathematician. Now, 5 into 25, 5 won't go into 2, will it?
No.
But 5 goes into 5 once. Now, we didn't use the 2 before, so we bring it down here. Now, 5 into 20 goes 4 times. There you are. 5 into 25, 14.
No, look, Pa. Let me prove it to you now by multiplication. 5 times 5. 5 times 5 is 25.
Billy, I'm surprised you're learning.
Huh?
I'm surprised that you're learning. Now I'll show you. 5 times 14 is 25. 5 times 4 is 20. 5 times 1 is 5. 25. That's it.
No, look, Ma. Look, you're wrong there because I'll prove it to you. We'll put down 5 14s here. 14. There. Now I'll prove to you by addition that 5 14s is not 25. 4, 8, 12, 16, 20.
21, 22, 23, 24, 25. There you are. Better brush up, Billy. I don't want to see you boys cheated.
I thank the Chamber of Taxation and Bombay Charitable Society for giving me opportunity and sharing my views, and also all of you for having patient hearing.
Thank you, Mr. Savla, for showing such immense knowledge. Our next speaker for the evening is C.A. Gautam Nayak. As I said, I believe he doesn't need any introduction, and I presume everybody here might be knowing him. But though he is the partner of C&K and Associates, which was formerly known as Contract Nayak Krishnadwala, he was a rank holder of both intermediate and final chartered accountancy examination. He's been in practice since 1986. He has been the president of BCAS for 4-5 and was also an editor for BCA Journal. He has also been an editor for BCA Referencer, and at present he is the chairman of the Taxation Committee of BCAS. He has co-authored 4 books, being Transaction in Shares and Securities, Taxation and Accounting, Livestock Accounting and Taxation, Taxation of Charitable Trust, and Voluntary Disclosure of Income Scheme 1997, which all are published by the Bombay Chartered Accountants Society. He has delivered, talked and presented papers at seminars and conferences which are organized by various professional bodies, which includes ICAI, ICSI, BCAS, CTC, Forum of Free Enterprises, and by several corporates, which includes CRISIL, National Academy of Direct Taxes, RBI Bankers Training College on subjects of taxation. He has regularly contributed towards the articles such as BCA Journal and Income Tax Review. He has also contributed towards the articles which are published in Economic Times and Outlook Man. I would now request Mr. Gautam Nayak to please share some taxation aspects on the charitable trust.
Mr. Sinha, Paras Savla, Komal, and respected Shri Arvind Bhai Dalal and dear friends. It's a pleasure to be with you once again to speak on the subject of taxation of charitable trusts. I think we are running a little behind time, and therefore what I will try to do is, though the time allotted to me is 1.25 hours, I'll try and compress my presentation into around an hour's time, so that the next speaker also has enough time, because I understand you have to vacate the hall by 5:30. Now, the subject of taxation of charitable trusts, I think, is something which, it's like in your final CA exam. I'm sure most of you have said this is optional. If it comes, let's see. So taxation of charitable trusts. Unfortunately, I think most chartered accountants and tax consultants regard it as a black box. So they feel that this is something quite different. Forget it. When it comes to it, I'll see what needs to be done. And that's the unfortunate part, because actually, really, it's quite simple. It's something which I think, with a little understanding of the fundamentals of it, it's very easy to understand. And let me spend maybe 5 minutes, though it's not in my slides, let me spend 5 minutes explaining how it fundamentally works, and therefore then it will make life, I think, it will make things easier for you going forward when we are talking about various aspects. When we are, as Paras mentioned, that in order to get the exemption under sections 11 to 13, you obviously need to be registered under section 12 AA. So that's something which is a must. Having done that, how do you compute the income of a charitable trust? What you really need to do is first work out what is the income. And for the purpose of working out the income, what you have to do is look at the book income, the commercial concept of income. Don't look at what is the income computed in the heads of income, because under the Income Tax Act, we've now become, sort of used to the fact that you have to calculate income under various heads of income. You can't, income means income is computed in a particular head. But when it comes to charitable trusts, what you're looking at is the exemption under section 11 to 13. And an exemption under 11 to 13 is to be computed in this manner. So therefore, what you're calculating is an exemption. Just like, you had your deduction under ATHSC. ATHSC deduction was in a different manner from what your normal computation was in that sense. So here, what happens now, the difference between ATHSC and sections 11 to 13 is, sections 11 to 13 is part of the Income Tax Act, forming part of Chapter 3, which is the exemptions portion. Unlike sections ATHSC, etc., which is part from, or ATIA, ATIB, etc., which is part of Chapter 6A. So therefore, ATIA, ATIB, ATHSC, all those calculations were post-computation under the various heads of income, whereas this is something which comes before computation under the heads of income. As you know, section 14 gives you the heads of income, and thereafter you have the 15 to 17 salaries, etc., or various provisions are there. So therefore, this is a computation of exemption which precedes the computation under the heads of income. That's something which you need to keep in mind. Having said that, the question then is, how does one compute the exemption? And that's where you first start off with what is your income. And for the purpose of income, you have a CBDT circular which clarifies that income is to be computed on a commercial basis. Commercial basis means you look at your income as per your income and expenditure account. You deduct from that the expenditure which is incurred for earning that income, and that is your commercial concept of income. So if, for instance, if you have rental income, and against the rent you have paid some municipal taxes, that is an expenditure incurred for earning the income. So therefore, what is your commercial income? It is the rent less the municipal taxes, which is your commercial income. So that's your first computation of income. Thereafter, what are you eligible for an exemption? Under section 11(1)(a), it says that income from property held under trust for charitable or religious purpose, to the extent that such income is applied for charitable or religious purposes. So what have you spent on charitable or religious purposes? That is allowed to you as a deduction. It's not a deduction, it's a deduction from the commercial income for the purpose of computing the exemption. So it's really not a deduction, but it's a manner of computing the exemption. So that's the first part. Then accumulation you are allowed up to 15% of the surplus. Now what you have to remember is that this is not a 15% a standard deduction and therefore you can have a loss, etc. That's something which is, what you are allowed to do is, if you have a surplus up to 15% of this commercial income, you can accumulate that up to 15% of that commercial income. So that is something which is in a sort of unconditional accumulation. There have been decisions which say that there has to be a conscious act of accumulation, etc. But I think it's enough if you just pass a resolution when you're adopting the account saying that yes, this 15% of the surplus, which may 15% of the income is to the extent of the surplus available is being accumulated under section 11(1)(a). So that's also permissible. Now, what you are allowed then thereafter is, if you have not spent, if you still have some income left over, some commercial income left over after this what you actually applied for charitable and religious purposes, plus this 15% which you have accumulated, then what you are allowed is, you have a choice that you can opt to spend the remaining surplus in the subsequent year. Now what happens is, for that you've got to file a simple letter saying that I'm opting to spend that in the subsequent year, and then you are allowed that to that extent. That is treated as an application of income for the current year. In the next year, whatever is the income applied for charitable or religious purpose, it has to be reduced from that. So that's the way you, so far as under the explanation section 11(1), you are allowed to opt to spend it in the subsequent year. There are of course decisions which say that even if you're supposed to do it before the due date of filing of your return of income, but if you file your return of income late and you file that along with that return of income, that is also acceptable. So there are decisions in the Bombay High Court, and Tulsidas Gopaldas Charitable Trust has taken that view. Still, if you have something left over or you don't want to spend it in the subsequent year, you know you're not going to be able to do that, you're allowed to accumulate the surplus up to a period of 5 years. Now, therefore, that accumulation is under section 11(2). You are allowed to accumulate that surplus for a period of up to 5 years. Now, that accumulation of the surplus is something which you have to file the form number 10. You have to file a copy of the resolution along with that. So that's the way. That form number 10 has to be filed before the due date of filing of the return of income. Even if you file it late before completion of assessment, Bombay Supreme Court has said that yes, that also has to be taken into account. So that's so far as 11(2) is concerned. Now, so far as capital gains is concerned, for capital gains, again, as we remember, the capital gains, we're talking about the commercial capital gains. We're not talking about capital gains as computed under the head capital gains. So if you have a profit on sale of an asset, that is your capital gain, which is reflected in your income and expenditure account. That capital gain, if you invest the consideration, really what happens is, whatever you reinvest into a capital asset, you're allowed a deduction, but first you have to assume that the initial capital asset, the value of the capital asset was reinvested, and then the surplus capital gains was reinvested. So for instance, if you sold an asset for say 100 rupees, the cost of that asset was say 20 rupees, you have a capital gains of 80. If you want complete exemption of that capital gains, you've got to reinvest 100 into another capital asset. And that capital asset, as we'll see later, can be anything which is a capital asset. It could be a fixed deposit with a bank, etc. There are various issues there which we will look at a little later. So that's so far as capital gains is concerned. And you have a separate exemption for corpus donations under section 11(1)(d), which says that corpus voluntary contributions where with a direction that they shall that it is for a capital that is towards the corpus will be exempted. So therefore, that is an unconditional list. That only requirement is that there should be a direction that it is towards the corpus. So that is the basic scheme of exemption. So therefore, you have a choice first to spend it. If you don't spend it, 15% you are allowed of your income. If that 15% of income, this is not enough, you can opt to spend it in subsequent year. You can accumulate it for 5 years. Capital gains, you don't pay tax. You don't have to invest it in specified bonds, etc. All that is not required. Of course, no indexation is also available because the computation is not under the head capital gains. So that is the fundamental scheme. To this, there are various nuances and various problems. For instance, now when we talk about the first point which we talk about is application for charitable or religious purpose. And for charitable purpose is defined under section 215 of the Income Tax Act. And what is charitable purpose? It says it is medical relief, education, relief of poverty. Then you have those other things which they've added on, a couple of things about archaeological things, etc., and wildlife and all that, and any other activity of general public utility. So, advancement of any other object of general public utility. Now, to that, from assessment year 2009-2010, you have an amendment which says that advancement of any other object of general public utility shall not be regarded as a charitable purpose if it involves carrying on any activity in the nature of trade, commerce or business, or any activity in relation to trade, commerce or business, for a cess or a fee or a consideration, irrespective of how that consideration is utilized, whether, for whatever purpose it is utilized. So that's the sum and substance of the amendment. And of course, there is a second proviso which says that if such income from such business activity, from such activity is less than 25 lakhs, then the first proviso will not apply. There are various issues, of course, which come in regarding taxation of trade organizations. Now, what will be happening is that we are seeing in the last 2 years, the Income Tax Department has been saying that many types of educational organizations which have been accepted as educational in the last few years, they're saying that, no, this is an advancement of any other object of general public utility, you are not educational, and therefore 215 is attracted, and therefore we are denying you the exemption. So therefore we look at what is the meaning of the term education. The taxability of corpus donations, where you lose the benefit of the exemption under section 11 and 12, is a corpus donation taxable, etc. So that's one of the issues which we need to look at. Conditional donations or grants, sometimes conditional donations or grants come with strings attached. Whether it is your income, what is the point of time is it your income. The deductibility of depreciation is depreciation deductible. What if you claim it as capital expenditure objects? We'll look at that. We'll look at whether you can carry forward your deficit. Accumulation under section 11(2), there are some issues. Capital gains, there are some issues. And there are issues raised in the recent CAG report, I think, which Arvind Bhai has dealt with in the morning. So probably I will skip that part when it's there with you in the slides, but I'll skip that part. Now coming to the definition of charitable purpose, section 215, let's go to that first. You have 6 limbs, as I said: relief of the poor, education, medical relief, preservation of environment, including watersheds, forests and wildlife, preservation of monuments, places or objects of artistic or historic interest, and advancement of any other object of general public utility. The proviso to section 215 applies. This is the amendment with effect from assessment year 2009-10, and it says it would not be a charitable purpose, advancement of any other object of general public utility. So it applies only to the last part. It does not apply to the first 5 parts. It would not be a charitable purpose if it involves carrying on of any activity in the nature of trade, commerce or business, or any activity of rendering any service in relation to trade, commerce or business, for a cess or a fee or any other consideration, irrespective of the nature of use, application or retention of income from such activity. And the exception for this is if the aggregate value of receipts from such activity is rupees 10 lakhs, it was at that initially, but now it's 25 lakhs which we have for assessment in 12-13 or less in the previous year. The explanatory memorandum to the finance bill, I think we need to go back a little and understand what was the reason for this amendment coming in, and that's where it said that it's noticed that a number of entities operating on commercial lines are claiming exemption on the ground that they are charitable, and they said that such a claim, when made in respect of an activity carried on commercial lines, is contrary to the intention of the provision. So this was in the context of Gujarat Maritime Board, where the Supreme Court held that the Gujarat Maritime Board was carrying on an active charitable purpose, advancement of any other object of general public utility. So therefore, though it was charging a fee for the use of the ports, etc., it was still regarded as exempt from on charitable purpose. So that seems to be the intention, that yes, you're operating on commercial lines and at the same time claiming exemption because saying that you're charitable. And so therefore, with a view to limiting the scope of this phrase, it is proposed to amend. So therefore, it is intended for commercial entities which are trying to claim the exemption of charitable. That's the whole basis. The finance minister, when he moved the amendments, at the time of passing of the finance bill, he mentioned that time that I again assure the House that genuine charitable organizations will not be affected, and CBDT will issue a circular containing guidelines for determining when it is carrying on an activity, etc. Whether the purpose is charitable purpose will depend on totality of facts. Chambers and commerce and similar organizations rendering service to members would not be affected, and activities would continue to be regarded as advancement of any other object of general public utility. So finance minister, as usual, said something, and what the CBDT did was something quite different. When you see the CBDT circular, and that's unfortunate part, which we've been seeing over the last 5-6 years, that what is said and what is done are two different things, unfortunately. And there the CBDT circular said that, again, they talked about number of entities engaged in commercial activities were claiming exemption. And then they said where, of course, one, they clarified that where purpose is relief of poor, education or medical relief, it will constitute charitable purpose. At that point of time, you did not have those other two clauses about wildlife preservation and archaeological things, etc. So even those, therefore, will be excluded now. It's only that advancement of any other object of general public utility. One important thing is also, it is only the definition of charitable purpose which is affected and not religious purpose. There is no definition of religious purpose under the Income Tax Act, and therefore religious organizations which are carrying on business activity will not be affected in any manner. So that's something which is clear. Then interestingly, one aspect which they clarified and which would be helpful in many cases is that relief of the poor encompasses a wide range of objects for the welfare of the economically and socially disadvantaged or needy. It would include relief to destitute, orphans or the handicapped. Particularly, these handicapped, for instance, they have these foot and mouth painting artists, they sell these visiting cards, etc., greeting cards and all that. So therefore they said that it would include handicapped, relief to handicap. That will fall under relief of poverty. So that's a good part, because otherwise somebody would have said that though he's handicapped, he's quite well off, so still why should he be, it's not relief of the poor. Somebody could have argued that. Then they said disadvantaged women or children, small and marginal farmers, indigent artisans, or senior citizens in need of aid. Again, so that's also something which they've clarified. So poor does not necessarily mean absolutely only slum dwellers, etc. So that's something which I think has been clarified, and therefore one needs to keep this in mind when one is dealing with some certain types of organizations. And then it goes on to say, the circular, that it will apply only to entities whose purpose is advancement of any other object of general public utility. And whether it's carrying on an activity in the nature of trade, commerce or business is a question of fact, depending on the nature, scope, extent and frequency of the activity. If it's engaged in the activity in the nature of trade, commerce or business or renders any service, it will not be entitled to claim that its object is charitable purpose. In such a case, object of general public utility is only a mask or a device to hide the true purpose. So what they're saying is, what you have to look at the true purpose. Is it trade, commerce or business, or rendering of service in relation to trade, commerce or business? It's only then that you lose the exemption. That's the... But they go on to say, each case would therefore be decided on its own facts and no generalization is possible. Now, which means that the income tax officers have a field day. When the CBDT says that every case is on its own facts, so in fact, Arvind Bhai, I think in his morning, he's referred to that Society for Advanced Microwave Engineering, etc., where the CAG has raised this point. Just yesterday we have filed an appeal on that. There's a demand of 7 crores they have raised on that. It's an organization which is set up by the government to encourage research in microwave engineering. Because they've charged some testing fees of some 1,000 rupees for issuing a certificate, so which just about covers their costs. But because they get grants from the government, so therefore they have a surplus, and that's being taxed now. So that's the way they've interpreted it. Unfortunately, I think these aspects, that what was the purpose? It was something which the government itself should have been doing. Maybe the Department of Electronics. It's promoted by the Department of Electronics. There's a government resolution saying that this should be formed for this particular purpose, which otherwise the government would have undertaken. So that's the way it is, unfortunately. But so question is this really a mask, or you mean to say the government wanted to carry on business and therefore it's carrying it on through this organization? Well, I don't know. If that's the way it's to be interpreted. But let's look at some of the decisions which have come in the recent this. One is that where you had this case of Lala Lajpat Rai Memorial Trust, which is running this Lala Lajpat Rai College at Haji Ali, where the main object of this Memorial Trust was promotion of education. It owned the building, and which it let out to other organizations within the similar organization for running educational institutions. Because its object was to promote the educational institutions. So the school or the college is run by a separate trust. The auditorium is meant to be used by educational institutions free of cost, and when it's free, then it's let out to other institutions or for other purposes. It was used by the college for 209 days, it was vacant for 76 days, and it was let out for 80 days during the year. Then the income tax officer, as usual, said this is a business activity, it's taxable, you have lost because of section 215, etc. The question here was whether the tribunal looked at it, is the provisor to section 215 attracted? They said that what is the dominant object? Is it letting of the auditorium? No, it's not. Letting of the auditorium is not the dominant object. The object is advancement of education. Incidentally, it is let out to outsiders where it is available, where it is not required for the educational purpose, and therefore this would not fall within the advancement of the object of general public utility. Provisor to section 215 is not attracted in this case. So they said, look at your dominant object. Your dominant object is education. this is something which incidentally you're earning some income. So therefore it cannot be regarded as an activity in relation to trade, commerce or business, or activity in the nature of trade, commerce or business. Then Institute of Chartered Accountants, they said the institute is running a business because the DGA exemptions said that you're running these coaching classes for students, refresher classes for students, you're running these CP programs, you're making a huge profit from that. Incidentally, of course, I'm told that the Competition Commission has also now instituted an inquiry against the Institute of Chartered Accountants in relation to CP programs, saying that you're having a monopoly, you're misusing the monopoly to make super profits from the CP programs, and therefore, why they should not permit competition in that for the CP programs. But anyway, so the question here was, as you know, the institute is a statutory authority under Chartered Accountants Act 1949 set up. There, the Delhi High Court looked at these aspects. They said that the utilization of funds or income earned is now not relevant. How it is the funds are used, that is not relevant. But they said very interestingly that while construing the term business for section 215, the object and purpose of the section has to be kept in mind, and it's not a very broad and extended definition of term business which is intended for this purpose of the first proviso of section 215, so that any transaction for a fee or money does not amount to business. That was that was what the Delhi High Court observed. Then they said that an activity is considered business if it is undertaken with a profit motive. But in some cases, this may also not be determinative. Normally, the profit motive test should be satisfied, but activity may be regarded business even when profit motive cannot be established. In such cases, there should be evidence and material to show that the activity has continued on sound and recognized business principle and is pursued with reasonable continuity. And there should be facts and other circumstances which justify and show that the activity undertaken is in fact in the nature of business. So those were the observations of the Delhi High Court in this case. In the case, then you had this question of Bureau of Indian Standards, again, which came up before the Delhi High Court. In fact, the Delhi High Court, there are a number of decisions which have come up in the context of section 215. The Bureau of Indian Standards is which grants this ISI mark. So it's set up by the government to grant the ISI mark. So it's a statutory body brought for into existence for harmonious development of activities of standardization, marking and quality certification, which is its primary and predominant object. It takes a license fee for granting such marks or certificates, some 1,000 rupees or 1,500 rupees it charges. And there the Delhi High Court observed that such profit or revenue earned is purely incidental. It performs a sovereign and a regulatory function in its capacity as an instrumentality of the state. It's not involved in carrying on an activity, therefore, in the nature of trade, commerce or business, and therefore it was held to be entitled to the benefit of exemption in this case. Then again the issue of Institute of Chartered Accountants, I think there are 3 or 4 decisions of the Institute where have come up before the Delhi High Court. I think Institute, because of the huge surplus that it makes, seems to be a soft target for the government, for the tax authorities. And the Delhi High Court, again here this was the same issues had come up. They said that the expressions trade, commerce and business occurring in the first proviso must be read in the context of the intent and purport of section 215 and cannot necessarily mean only an activity carried on in an organized manner. And what is the purpose and dominant object for which the institution is carrying on its activity? That is material to determine whether it is business or not. The purport of the first proviso is not to exclude entities which are essentially for charitable purpose but are conducting some activities for consideration of fee. So what is the dominant purpose? That's the test that you have to look at. And object of introducing the first proviso is to exclude organizations which are carrying on regular business from the scope of, those are to be excluded from the scope of charitable purpose. And expressions trade, commerce and business must be construed restrictively. Where dominant object is charitable, incidental activity for furtherance of the object would not fall within the expressions. And activity of imparting education in the field of accountancy and conducting courses, both at pre-qualification and post-qualification level, were activity in furtherance of objects for which institute was constituted. Activities of providing coaching classes or undertaking campus placement interviews for a fee were in relation to this main object. But that main object cannot be held to be trade, commerce or business, and therefore these activities cannot also be held to be trade, commerce or business. So even though fees are charged for such activities, the activities cannot be stated to be rendering of service in relation to any trade, commerce or business, as such activities are undertaken in furtherance of the main object. Then there is an interesting decision of the Lucknow Development Authority, Allahabad High Court decision, where this was a statutory authority set up by the UP government with the object of and development of certain areas and to provide shelter to homeless people within the state of UP. So therefore, it was carrying on construction activities and selling those, etc. And there, the Allahabad High Court also observed that for the applicability of the proviso to Section 215, the activities have to be carried out on commercial lines with the intention to make a profit. Where activities are carried out on non-commercial lines with no motive to earn profits for fulfillment of its aims and objectives which are charitable in nature, and in the process some profits are earned, this is not hit by the proviso to Section 215. Mere selling of some product at a profit will not attract the proviso to 215 to deny exemption. What you have to look at is the intention of the trustees and the manner in which the activities are undertaken. These are the highly relevant aspects to decide the issue. And here they said that there is no evidence to show that the SSE is conducting its affairs on commercial lines with the intention to earn profit, and therefore they held that the proviso to Section 215 is not applicable. It was held that the Lucknow Development Authority is eligible for the benefit of the exemption, because what was its dominant objective? Development of that area and to provide shelter to homeless people, and that was held to be a charitable purpose. We have then the Ahmedabad Tribunal decision in the case of Sabarmati Ashram Gaushala Trust. This was a trust which was registered with the objective of breeding cattle to improve the quality of cows and oxen. Obviously in that process it got semen, fodder and milk, which is sold to, and it earned some profit in the process. The tribunal looked at it and they said that only the institutions carrying on commercial activities are intended to be covered, not genuine charitable institutions. In order to hold that it is in the nature of trade, commerce or business, there has to be a profit motive. But if during the course of carrying on activity on non-commercial lines, some profit is received, which is incidental to the activities, this cannot be construed to be activity in the nature of trade, commerce or business. And here what was happening was, it was carrying out its object of breeding cattle and improving the quality of cows and oxen. And it sold semen, fodder, milk, and in that process earned some profit, which was incidental in nature to its main object. And they said, what are the factors which you have to look at? They look at the objects of the trust, the purpose and manner of activities of the trust, whether to make profit or whether profit earned was incidental to activities of the trust, and overall facts and circumstances in its entirety. Volume of profit received by the trust, whether activities were conducted in a way to fulfill the object, which has essentially to be charitable in nature, intention of the trustees, all these have to be considered to arrive at a just and fair conclusion. Cases where profit making is the object is to be distinguished from cases where, though objects are charitable, but some profit is made out of activities undertaken for the purpose of achieving those objects. So to decide the applicability of the proviso, entirety of facts and circumstances of the case, and in particular the fact whether activities are carried out with a motive to earn profit, or profit earned is merely incidental to while conducting charitable objects, that has to be considered. So in the first sort of situation where the activities are carried out with a motive to earn profit, that is hit by the proviso to 215. But where the profit earned is merely incidental while carrying out the charitable objects, that is not hit by the proviso. Then that comes, so that is so far as activity in the nature of trade, commerce or business. These are a few of the decisions, as I said, which would help to understand what is meaning of trade, commerce or business. Then when you come to activities in relation to trade, commerce or business. Now in relation to trade, commerce or business, does it mean that, say for instance, today you are today you're carrying on say an activity of say supplying foodstuffs, say, to a company. So are you doing an activity in relation to trade, commerce or business because you're supplying to a company certain foodstuffs, though it may be manufactured by, say, people from poor families, etc. So women from poor families may be doing the cooking, etc. Of course, there it may possibly fall under the relief of poverty, but there could be various other such situations which could arise. And here, unfortunately, we have the Andhra Pradesh High Court decision, which was looking at a situation where Andhra Pradesh State Seed Certification Agency, where this was set up by the Andhra Pradesh State Government, it was for the purpose of certification of seed which meets the minimum seed certification standards as per the Standards Act. It was notified as a certification agency under that Act, under Section 8 of the Seeds Act. The seed growers entered into contract with this with a society or agent who approached the SSE for certification, and then after the certification the seeds were sold to farmers. A fee was charged for that certification, and there the Andhra Pradesh High Court observed that the certification of seeds facilitates trade, commerce or business certified seeds by the client of the SSE, and therefore the activity is in relation to trade, commerce or business. And they said that ignoring those words, that in relation to trade, commerce or business, you do have to look at not only in the nature of trade, commerce or business, but in relation to trade, commerce or business. They said that you are related, so therefore they said that this is not charitable purpose, And you had a similar view taken by the Chandigarh Tribunal in Punjab State Seed Certification Authority. Similar view was taken. But the Delhi High Court has taken a very interesting view, and which I think is the better view of the matter. The issue before the Delhi High Court, and we'll go into this decision in a little bit more depth, and this was a case of GS1 India, where this was an institution promoted by the government for creating awareness and promoting study of global standards regarding certain EDI, ECR, etc., and R&D, and providing educations regarding certain standards, worldwide standards, which are called GS1 standards. And the Delhi High Court observed that a business activity has an important pervading element of self-interest, while charity is the antithesis of this activity. It's undertaken with profit motive, or activity undertaken on sound or recognized principle. Is the opposite of such activity. Charity is driven by altruism and a desire to serve others, though the element of self-preservation may be present. Here they said that this was a case where for the certification a certain fee was being charged, just like in the case of Bureau of Indian Standards. And there they said that a small contribution by way of fee that the beneficiary pays would not convert the charitable activity into a business, commerce or trade in the absence of contrary evidence. It's not a case of commercial exploitation of IPR and monopoly rights to earn profits, but a case where a token fee is payable by the user of the global identification system. And there they said that in this case, the very object, on the basis of the objects of promoting these standards and education, etc., and certification, etc., 12AA registration has been granted. So it's a contrary stand of the revenue that the assessee is carrying on charitable activity, but simultaneously regards the activity as a business. So that same activity cannot be charitable and business. That was one very interesting observation of Delhi. And intention behind the activity is philanthropic and not to recoup or reimburse in monetary terms what is given to the beneficiaries. They could have charged much higher fees given the monopoly status, but that was not charged. The fee charged and the quantum of income earned can be indicative of whether a person is carrying on business, but one needs to keep in mind that charitable activities require operational and running expenses, as well as capital expenses to be able to sustain and continue in the long run. It has to be substantially self-sustaining in the long run. In fact, that is one of the aspects which the Income Tax Department loses sight of, that today I might have some equipment, but that equipment has to be replaced after, and that cost of replacement may run into a few crores after a few years, and that's where one obviously charges a certain, one earns a certain surplus. The Delhi High Court interestingly observed that it's not necessary that charitable activities have to be funded by voluntary contributions. So you can choose to generate, be self-sustaining and not depend on voluntary contributions. Then the question is whether providing services to persons engaged in trade, commerce or business, whether that is an activity in relation to trade, commerce or business. Because all the certification was being given to commercial entities, most of it was to commercial entities. Then therefore the Delhi High Court looked at what is the legislative intent. Is the legislative intent to exclude an activity which has the aim and object of providing services to trade, commerce or business? They said it's not free from doubt. But there is a good reason to hold that prohibition is not with reference to the activity of the beneficiaries to whom the certification services are being provided, but to the activity of the assessee under the residuary clause. So therefore, in relation to trade, commerce or business has to be read in relation to trade, commerce or business carried on by the trust itself. That's what you have to look at it, not at the trade, commerce or business being carried on by the beneficiaries. So intention is to exclude an assessee who carries on business, trade or commerce to feed charitable activities under the last limb of the definition of charitable purpose. So that is what the Delhi High Court. And then they said application of income is no longer relevant. Circular 11 of 2008 does not contradict this. It stipulates that the object of general public utility should not be a mask or a device to hide the true purpose, which is trade, commerce or business, or rendering any service in relation to trade, commerce or business. Then of course they went on to say that the beneficiaries of GS1 were not restricted to persons from trade, commerce or business and may include consumers, government, beneficiaries of PDS, etc. So, but on these grounds, therefore, they held that it's not carrying on an activity in the nature of trade, commerce or business, nor an activity in relation to trade, commerce or business, and therefore it was held that the income of GS1 India was eligible for the benefit of exemption. Let's quickly look at taxation of chambers of commerce and trade organizations, where the finance minister has said that they will not be affected by the amendment and would be continued to be regarded as advancement of objective general public. You have the various Supreme Court decisions saying that promotion of trade, commerce and industry is also a advancement of any other object of general public utility, and therefore it's a charitable purpose. So therefore the finance minister confirmed that that position will continue, he said. But the circular 11 of 2008 said that mutual exemption under mutuality will be available for such organizations for dealings with members. For dealings with non-members, the claim to be charitable organization would now be governed by the additional conditions laid down in section 215. And so therefore they said that that would depend upon whether you are fulfill those conditions, and which again they will try to say that this is in relation to trade, commerce or business, because a chamber of commerce or a trade organization is obviously rendering services to its members or to the industry, particular industry. But of course, as one looks at it with the recent Delhi High Court decision in GS1 India, possibly one can argue that still the policy still continues, that they are carrying on charitable activity. But if you're claiming exemption on the grounds of mutuality, what you need to keep in mind is section 28(3) read with section 224(5) and section 44A, which says that income from specific services rendered to members by such trade organizations would be taxable. So mutuality benefit is available for income other than income from rendering specific services to members. 44A says that whatever is the loss from mutuality, to the extent of 50% of the income from specific services, you can set off. So that is possible. The other aspect, of course, is that interest income which such an organization would not be exempt on the grounds of mutuality, as based on the recent Supreme Court decision in the case of Bangalore Club. So therefore that would not be exempt. Interest income would be taxable. Income from rendering specific services would be taxable. You can set off 50% of to the extent of the income from specific services, you can set off 50% of the loss from mutuality. If there is a loss on the mutual transactions, that can be set off. That would be the position. Interestingly, here also we have, of course, this PhD Chamber of Commerce and Industry recent Delhi High Court decision, but which was in the context for the assessment year 2007-8, that is prior to the amendment, where this was a Chamber of Commerce and Industry. In course of pursuing its objects, it rendered services such as certification, committee room services, secretarial services, energy audit, etc. to its members and non-members for a fee. There the Delhi High Court observed that no doubt that the activities are incidental to attainment of the objects of the chamber. Judicial thinking was never in favor of the view that services performed by a trade, professional or similar association such as Chamber of Commerce and Industry were in pursuit of a business or trade with a profit motive. Section 28(3) has been enacted to ensure that surplus from such specific services does not enjoy any exemption, which would otherwise have been exempt on account of mutuality. Since the surplus had to be brought to tax under a particular head, it was thought by the legislature that the head profits and gains of business would be the most appropriate head under which the surplus can be taxed. This does not, however, mean that a business is carried on by the association in the sense that there is a profit motive which drives the carrying on of the activity. Services are performed in the true spirit of service to members of the association such as the Chamber of Commerce, and the fees charged are so calculated or fixed that it merely covers the costs incurred in rendering the service. Since accuracy in matching costs and fees charged cannot be maintained consistently, there can arise a surplus. The mere arising of a surplus does not clothe the activity of performing the services for the members with a profit motive, which is essential in business. The most important feature of business is profit motive. It has not been suggested by the income tax authorities that activities carried out by the SSE were propelled by any profit motive, and therefore they held that it was entitled to exemption. As I said, this was prior to the amendment, but even after the amendment, some of the observations will be useful, that business is not being carried on, etc. That is something which will be useful even after the amendment. Coming to the next issue about whether education necessarily means the recognized education institution, as I said, the department is relying on the decision of the Supreme Court in Lok Shikshan Trust, where they reproduce these words. The word education connotes the process of training and development, knowledge, skill, and mind and character of students by normal schooling, and has not been used in the wide and extensive sense according to which every acquisition of further knowledge constitutes education. So they reproduce that and say that therefore you are not carrying on education, because education means only some course which is recognized by the University Grants Commission or by a university, etc. So that's the only case. That's the way they look at it. But there are certain other observations of the Supreme Court which we need to look at, and there it says that sense in which word education has been used in section 215 is a systematic instruction, schooling or training given to the young in preparation for the work of life. It also connotes the whole course of scholastic instruction which a person has received. Although the term education as used in section 215 seems wider and more comprehensive than education through educational institutions such as universities whose income is given exemption under section 2022, provided it does not exist for purpose of profit, yet it seems that the educational effects of a newspaper publishing business are only indirect, problematic and quite incidental, so that without imposing any conditional qualification upon nature of information to be disseminated or material to be published, the mere publication of news or views cannot be said to serve a purely or even a predominantly educational purpose in its ordinary and usual sense. The facts in this case was that the object was publication of a newspaper to educate public opinion. So therefore the Supreme Court said that this is your main object is publishing a newspaper, which is a profit-making activity. So it was in that context that these observations have to be understood, and that's where in fact, subsequently various high courts have read down this Supreme Court decision, and they said that Supreme Court in the above observation, by referring to the systematic instruction, schooling or training given to young, has only cited an instance in order to indicate what education appearing in 215 is intended to mean. We are certain that these observations were not intended to keep out of the word education persons other than young. The expression schooling also means that schools instructs or educates. The Supreme Court has observed that word education also connotes whole course of scholastic instruction. This clearly indicates that observation of Supreme Court was not intended to give a narrow or pedantic sense to the word education. By giving further illustration, in fact, Supreme Court gave some instances. They said that victims of swindlers and thieves becoming wiser, visitors to nightclubs adding to their knowledge the hidden mysteries of life. So that education not used in such a loose sense. That's what the Supreme Court. So if your wallet is picked, you are become wiser, but that doesn't mean that's not education. That's what the Supreme Court said. So the observation of Supreme Court only indicate the proper confines of the word education in the context of section 215. It will not be proper to construe these observations in a manner with which they are construed by tribunal when it infers from these observations that the word education is limited to schools, college and similar education institutions and does not extend to any other media for acquisition of such acquisition of knowledge. The observation of Supreme Court do not confine the word education only to scholastic instructions, but other forms of education also are included in the word education. This was a case where the trade union was imparting training to its workers, to the members of the union, and that's where they said that this is also eligible. And then it goes on to say, as noticed above, the word schooling also means instructing or educating. It therefore cannot be said that the word education has been given an unduly restricted meaning. And though in context of 1022, concept of education need not be given a wide or extended meaning, it surely would encompass systematic dissemination of knowledge and training in specialized subjects. The question whether an educational institution is existing solely for educational purposes can be decided with reference to activities actually carried on by it. Advancement of knowledge brings within its fold suitable methods of its dissemination, and though primary method of sitting in a classroom may remain ideal for most of the initial education, it may become necessary to have a different outlook for further education. It is not necessary to nail down the concept of education to a particular formula. Its progress lies in acceptance of new ideas and development of appropriate means to reach them to the recipient. So for instance, today can you say that these online education courses which are offered, so in fact Harvard, MIT, all these offer online education courses, can we say that this is not education? It certainly is education. So therefore, just it does not mean necessarily sitting in a classroom and learning from a teacher who writes on a blackboard. That's not necessarily now the way you have to look at education. The Gujarat High Court also in Saurashtra Education Foundation where looked at it as, they drew a distinction between education institution under section 1022 and under section 215. They said an institution may be carry on educational activities as are carried on by the SSC without imparting formal education and without being affiliated to or accountable to any authority. Such a trust can certainly be considered as qualified for exemption under 11(1)(a) read with 215, but the term educational institution contemplated by 1022, which is now 1023C, is a narrower concept. Though educational institution and educational activities are closely interconnected, in 11(1)(a) read with 215, it is activities which are in focus, whereas in 1022, both institution and activities are in focus. An educational institution under 1022 is therefore more than a body carrying on charitable activity in the field of education as contemplated by section 215. Then there are various other tribunal decisions, Indian Institute of Bankers, and that there is no formal college, etc. And there again it said that this would amount to education in this case. So it's not necessary that it should run a school or college in a formal sense in order to qualify for the exemption. They again read down the Supreme Court decision. You have the Bombay High Court decision in the case of National Safety Council. It's a short decision, but there the objects were educating public in regard to safety, protection and health among industrial workers, to organize and conduct programs, lectures, conferences and other activities for promoting free discussion on all matters in question related to safety measures, procedure and research, to conduct educational campaigns with a view to arouse and maintain public utility and interests of employers and workers, and their support to safety and action prevention, and to encourage all persons and other associations to adopt, institute and support safety measures and action prevention programs. There the Bombay High Court said that this amounts to education for the purposes of section 215. Therefore it was held. Ahmedabad Management Association, a recent Ahmedabad tribunal decision where they said that this was conducting over 800 courses and programs, meetings, discussions, lectures, research projects, seminars, conferences, program of studies, And they said that this is not a case where it's not engaged in activity of instruction or education. It's granting a diploma. More than 80% of the receipts were on account of continuing education, diploma and certificate programs, and therefore it fulfills the test of systematic institution and training, though it provides it to persons who are already graduates in that sense. So therefore it's not necessary that, or it's not a recognized MBA program, etc. It's not necessary, that is not required. So that is therefore the way, education has to be construed is in a manner, as I said, it's not a very restrictive way in which one has to look at section 215 for the purpose of education, but it's a much broader manner. Let's go to the next issue, and that is on in relation to corpus donations. And as you know that you have 11(1)(d) which provides exemption to corpus donations, and which says income in the form of voluntary contribution made with a specific direction that it shall form part of the corpus of the trust, that will be exempt from tax. 224(2)(a) merely says, which voluntary contributions earlier are basically capital receipts. What is a donation? A donation is a capital receipt for the recipient. It would not have been taxable if it was not deemed to be income under section 224(2)(a). And it says voluntary contributions received by trust for charitable or religious purposes would be regarded as its income. Till assessment year 1988-89, the provision was that voluntary contributions received by a trust, not being contribution made with a specific direction that they shall form part of the corpus of the trust. So that was in the definition of income. You did not have 11(1)(d). In 88-89, these words, not being contribution made with a specific direction that they shall form part of the corpus of the trust, those words were deleted and section 11(1)(d) was inserted. So the department takes the view that if you lose your exemption, corpus donations also become taxable as your regular income because it is income under section 224(2)(a). That is the stand which the department takes. There I would just like to draw your attention to a Delhi High Court decision of 2009 where it's an unreported decision in case of Basanti Devi and Chakanlal Garg Education Trust, where the High Court held that this is a capital receipt and not chargeable to tax. This was a situation where exemption was granted from a later year onwards. The 12AA application was filed late, and therefore the exemption was granted from a later point of time. There the Delhi High Court said that this is a capital receipt and not a revenue receipt. So though for the particular year you are not entitled to exemption under section 11 and 12, nevertheless the corpus donations cannot be taxed as your income. Similar view it was taken by the ITT in the same case, Basanti Devi and Chakanlal Garg Education Trust in this by Delhi Tribunal. Even the Agra Tribunal in Gaudiya Granth Anuved Trust has taken a similar view that it's a capital receipt not taxable, and you had the Calcutta Tribunal decision in Shankar Bhagwan Estate, where this was for assessment year 91-92, which is after the amendment, where they said the position after amendment is similar to position prior to 1973. Prior to 73, you had a situation where voluntary under section 12(1), voluntary contributions received towards received from another trust were taxable, but at that point of time, you had the decision of the Bombay High Court in Kasturbai Singh Commission Trust, which said that if they are received towards corpus, even if they are received from another trust, if they are received towards corpus donations are not income, and therefore it would not be taxable at that point of time. And the tribunal says that the position after the amendment is similar, and therefore even after assessment year 1989-90 onwards, still the position would be the same, that corpus donation would still continue to be capital receipts. So if you happen to lose exemption and the income tax officer taxes the corpus donation, I think one should take the matter up in appeal, definitely, that this is a capital receipt and not taxable at all. What is the meaning of the term corpus? And that's something which often, you have the letter saying that this is for the building, or you have a building fund, and the officer said, no, this is not towards corpus, it's towards your building fund. Now, is that the correctness? What is the meaning of corpus? Corpus, the dictionary meaning is capital, as opposed to an income or regular income. So it's a capital receipt basically. It is a capital of an estate, capital of a trust, a capital of an institution. The Karnataka High Court recently in Ramakrishna Seva Ashram looked at that, and they said that therefore if any voluntary contribution is made with specific direction, it shall be treated as capital of the trust for carrying on its charitable activities. Then such an income falls under 11(1)(d), not liable. Therefore, it's not necessary that a voluntary contribution should be made with specific direction to treat it as corpus. If the intention of the donor, you look at, if the intention of donors to give that money to a trust which will keep it in trust account in deposit, and the income is utilized for carrying on particular activities, satisfies the definition part of corpus, accessory would be, so they're saying that it's not necessary that you have a written communication from the donor saying that it is towards this particular. If the circumstances indicate that the donor intended to give it towards for a capital purpose, it would be a corpus donation and would therefore be exempt. They said what is relevant is the intention of the donor and how the recipient assessee treats it. If the intention of the donor is that the amount is to be treated as capital and income from the capital has to be used for charitable purpose, then the voluntary contribution is towards part of the corpus. Similarly, if the assessee after receiving keeps the amount in deposit and only utilize income to carry out charitable activities, then the amount would be a contribution to corpus, and nomenclature in which it is kept in deposit is of no relevance, so long as the contribution is kept in deposit capital and only income from the capital is used for carrying on charitable and religious activities. The law does not require that the direction should be in writing. That's what the Karnataka High Court observed. In the instant case, those people who have paid amounts by way of donations that include the check with a letter with a specific direction, which is in compliance with 11D, in case if the contributions are made without checks, that is by cash, an oral direction has been issued to the trust to utilize the fund for the purpose of treating the leprosy patients, and if such amounts are credited to the account meant for it, even then provisions of section 11(1)D are complied with. So therefore, it's not necessary that you have to have only letters in writing. That's something which the Karnataka High Court has said. You know, there have been earlier, there had been issues about you have hundis, you know, a hundi box with a saying that this is towards the corpus, and you put it into the hundi box. There have been conflicting decisions. They said that how do you know that the donor intended it to be corpus, etc. So if you had only one hundi box, then obviously he'll put it only into that. But if you had two which are side by side, one is for regular and one is for corpus, then perhaps one can take the view. So there have been conflicting decisions on that, but this, I think, Karnataka High Court decision therefore will be useful now. This is the first High Court decision on the issue. Coming to the next aspect about conditional donations or grants, whether they are income. Now the question here is really this, that very often you receive a donation saying that it is to be utilized for this particular purpose. If you do not utilize it within so and so time, then that is to be refunded. The unspent amount is to be refunded to the donor. That is, so therefore it's a conditional donation. Now can one take the stand that it is not an income because until that condition is fulfilled, I don't have a right to that amount. So therefore can one take that stand, and therefore there are a couple of decisions which have, in fact 3 decisions which have taken that view, that in such situation is not an income but a liability. It's only when you fulfill those conditions that it becomes an income, and that's at the point of time when you spent it for that particular purpose. But there is one decision of the Bombay High Court where they said that the conditions of grant are merely to ensure proper utilization, and it still remains a voluntary contribution. Of course, if you look at the Bombay High Court decision, the issue was really, I think it was really not that the argument was not taken for that this is really still a liability. It's not, you know, I have a right to refund. I mean, I have a liability to refund it, and therefore it's not my income at this juncture. That argument was not put forward before the Bombay High Court, and therefore I think one can distinguish this Bombay High Court decision on the facts. Coming to the next aspect about depreciation, would a depreciation would be allowable on capital expenditure claimed as an application of income? You know, so as you know, when you have application of income for charitable purposes, both capital expenditure and revenue expenditure both are to be allowable. The question is, if you claim some capital expenditure as in your books of account, you will obviously capitalize it because you will have to follow accounting standards, etc. You will capitalize it. But in your computation, you will say that capital expenditure on objects, you will claim that as an application of income for charitable purposes and part of your 85% spending, etc. Then can you continue to claim depreciation on that in subsequent years? That's the question which arises. We had, of course, the Bombay High Court decision in the case of Institute of Banking Personnel Selection in 264 ITR, where they followed the earlier Bombay High Court in the case of Ramji Kawasji Institute. They said that income for charitable trust is liable to be computed in normal commercial manner, and they said section 32 would not apply to such depreciation. Income is to be allowed after providing for allowance for normal depreciation. As we saw, this is an exemption provision. It is not a competition under the heads of income. So you don't have to look at section 32. Section 32 comes under business income. So you don't look at or for income from other sources. So here you don't have to look at that because you're looking at an exemption provision. So whatever is the depreciation which is computed, reasonable depreciation which is computed by the trust and provided in the books of account, that is the depreciation which is allowable. And they went on to say that deduction was allowable, depreciation was allowable even on those assets whose actual cost has been allowed as a deduction in computing the income of the earlier years. So Bombay High Court just said that. They didn't get into too much details. We had the Kerala High Court in Lizzie Medical Institutions where they said that in order to reflect the true income that was available for application for charitable purpose, the assessee should write back the depreciation amount in the accounts to form part of income to be accounted for application for charitable purpose. So they're saying you write back the depreciation, you treat it as a part of commercial income, and then, for the income available for application for charitable purposes got reduced by the depreciation amount, which was not permissible under Section 11. Now, certain interesting observations. Such notional claim of depreciation became cash surplus available as SSE, which remained outside the books of accounts of the trust unless it was written back. Charitable institutions were generating unaccounted income equal to the depreciation amount claimed on a year-to-year basis, which was nothing but black money. Now, I don't know. Of course, they followed this. Of course, then they went on a little more reasonable. They said that in Escorts Limited, the question had come up before the Supreme Court as to whether, for scientific research, you're allowed the entire capital expenditure on the acquisition of assets, whether you can claim depreciation again. And there the Supreme Court had said that unless it is expressly provided for, it is not to be presumed, a double deduction is not to be presumed. Now there again, so the question is, so they followed Escorts anyway, and they said that no, this is black money generation and which we cannot be a party to. So that was, but the Punjab and Haryana High Court in CAT versus Market Committee, Pipli has said that this is not a double deduction. Income is exempt. It is only claiming that depreciation that was required to be reduced for determining percentage of funds that were to be. See, there have been a series of decisions on depreciation, whether depreciation is allowable. Leaving aside this double deduction, they've said, is depreciation allowable in computing the income, the exemption? And there they said that income on a commercial basis necessarily means that depreciation has to be allowed. So commercial basis means you have to allow the depreciation, and therefore that unanimous various high courts have taken that view. So therefore here they say that what are you doing? You're doing two different things. One, when you claim that firstly as the capital expenditure, you're claiming it as an application of income for charitable purpose. When you're claiming depreciation as a deduction, it is a deduction for computing the commercial income. They're two different things, and therefore that should not be a problem. And again, the Delhi High Court in the Vishwa Jagriti Mission also has taken a similar view that depreciation is necessary charge in computing the net income, and allowance of depreciation is necessary on commercial principles. So even though you had claimed the capital expenditure as an application of income for charitable purpose, still you would be eligible for the benefit of depreciation. So of course, as I said, that this is something which is bound to reach the Supreme Court, and I'm sure because with all the High Court decisions now coming, the matter will hopefully the Supreme Court will sort it out. I hope then that we don't have a retrospective amendment, going back 30 years or 50 years. So that's the only hope that one. So far as carry forward of deficit of trust is concerned, that there is no specific provision for carry forward of deficit. Many people ask, that can I carry forward on Section 72? Which section? What if I file the return late? Would Section 80 apply? Now there's no specific provision, but you had, there is CBD Circular number 100 of 24th January 73, which says that when you take a loan in 1 year and you spend that amount, but subsequent year when you repay that loan, that repayment of the loan will be regarded as an application of income for charitable purposes. So effectively, there is again no limitation under Section 11 that the income should be applied for charitable purposes only in the year in which the income has arisen. So therefore, you could have a situation where you spend that income earlier and thereafter you're recouping it out of you spent earlier and then you're recouping out of the income. That's the objective. That's the way you have to look at this deficit, and therefore it is on general principles of commercial basis that you have to look at it. And there are a series of decisions which are listed out here, including Bombay High Court, where they've taken a view that expenditure incurred in an early year can be adjusted against the income of a subsequent year. Interestingly, if you look at that CAG report, which Arvind Bhai has also referred to in the morning, that CAG report, the CAG has raised this issue, and the Finance Ministry has said that the issue is now settled because SLP against these has been dismissed by the Supreme Court, and therefore the issue is now settled that the deficit is allowed to be set off in a subsequent year. So therefore that's something which you can also point out from the CAG report, that the Finance Ministry itself is accepting that position. Then coming to accumulation under Section 11(2). Now, question very often is, should I file one form number 10 or should I file multiple form number 10s for each year? Because what you're allowed to do is file an accumulation for accumulating it for a period of up to 5 years is from the end of the relevant assessment year, from the end of the relevant previous year. And many people have a tendency to file, saying that for this year and the next 5 years, whatever surplus maybe there is will be spent in the 6th year. Now, is that advisable or should you file a separate form number 10? Separate is always advisable, frankly speaking, because one is that you don't have to spend everything in the 6th year. You get For the first one you have to spend in by the 6th year. For the second one you have to spend in the 7th year, etc. So you get that advantage. That's one. Of course, you had this Bombay Tribunal decision which says that applications should be made each year. And general application that's for the accumulated period of time is not possible. But I think if you look at the language of the form, it does permit that. And of course, Bombay Tribunal, in another case, Cotton Textile Export Promotion Council has said that you can do that. But as I said, it's always advantageous to file separate for each year. Along with the return, make it a habit to file that form number 10 when you're doing the competition. And as I said, the Supreme Court in Nagpur Hotel Owners Association has taken in 247 ITR, has taken a view that, 248 ITR, I think, has taken a view that even if you don't file the form number 10 along with the return of income or before the due date of filing of the return of income, so long as it is filed during the course of assessment proceedings, before the assessment order is passed, that has to be considered by the assessing officer. It is a valid form number 10. And there is also a CBDT circular to that effect. Of course, we'll look at that in the next slide. And then the question is whether in the form number 10 you should specify specific purposes, or you can just say for the objects of the trust, or for medical purposes, for educational purposes, should you do that? I think it's always better, because there is a controversy and raised on account by one Calcutta High Court decision, which is followed also by the Madras High Court. They said that no, it is specific purposes and not the general objects. And I think it's always advisable to list out, you might list out 20 items on which you might want to spend. So there's no restriction on the number of purposes which you want. But instead of having a general object, you try and list out, saying that to give, say for instance, foreign loan scholarships, to construct a building for the activities of the trust, etc. One can put in as many as one wants. As I said, that delay in filing Form 10, the CBDT circular which says that these 5 conditions, if they are fulfilled, that the delay should be condoned, where the genuineness is not in doubt, failure to give notice and invest due to oversight, there is no benefit to trustee or settler, and investment of surplus before grant of extension of time, and the accumulation was necessary for carrying out objects of the trust. And then the Supreme Court decision which I said. One important thing here is people often make the mistake that which year is it taxable. Say for instance, for assessment year 13-14 now, March 13 you accumulate for a period of 5 years up to March 18. Now is it taxable in the year ending that previous year 17-18 or previous year 18-19? It's taxable in 18-19, it's the 6th year. That's something which you need to keep in mind, because you can spend even in the 6th year. Now whether you can further accumulate under section 11.2 or under 11.1a, I think that's not, I don't think that's the intention, and therefore I would not, though there is a Calcutta High Court decision which says you can further accumulate under 11.2, but that would amount to an indefinite carry forward, and I don't think that is the intention. Capital gains, as I said, to be computed on a commercial income basis, not as per 48. It's treated as application of income for charitable purpose and exempt if it's reinvested capital asset. There's no time limit for reinvestment. But you have to make the investment by the end of the year to see that in the balance sheet it would need to be reflected. Even a 15-day fixed deposit would qualify. There's a CBDT instruction which says 6 months fixed deposit. Calcutta High Court which says 60 days fixed deposit. And interestingly, a Madras High Court which says that even a current account is a deposit with the scheduled bank, and that would qualify. That's something I would not say don't keep it in a current account, keep it at least for 15 days with a scheduled bank, at least, and as at the end of the year it should be there. The Calcutta High Court says that investment, because this would be treated as an application for charitable purposes, so therefore when you opt to spend, you can opt to spend it in the subsequent year also. You can opt to invest it in the subsequent year. That's the view which the Calcutta High Court has taken. Then the CAG report, of course, those points are there with you, and Arvind Bhai has dealt with some of them. But some of the things which could possibly come up, and in the last slide, I think this is something which may come in, and therefore one should be prepared for these things coming in the near future, given that the CAG has made these recommendations. Of course, the Finance Ministry does not agree with many of these suggestions. Coming to that one query which was there about Wadi, whether that would qualify, I think what you have to look at is what are the objects of the trust firstly. If the objects of the trust are charitable in nature, running of a Wadi is one of those which is generating an income which feeds those charitable objects, and it's incidental to those objects, etc. The Wadi is also used for those charitable purposes, etc. Like your Lala Lajpat Rai situation, there one can take the stand that really this is not a business activity, it's a mere renting. The problem really arises if you're providing other services like catering along with that, or you're providing certain other decoration services, etc. So that is something to be avoided. I think that precaution one should take. and then one would be possibly able to claim the benefit of it. But what you have to remember is, if that is the only object of running of the wadi, that may not be regarded as a charitable purpose. That is the risk which one runs, because I think there is a Supreme Court decision, if I'm not mistaken, Arvind Bhai would, letting of a, that was a Kalyan Mandapam, I think, was held not to be a charitable object in that sense. So that's something which you have to be careful about. Well, I think, thank you for a very patient hearing, and I don't know whether it's time for questions, because the next speaker is already wait. I hope I've made up around 10-15 minutes of the delay. Anyway, thank you very much.
May I request Mr. Sinha to conclude the session?
We are already running short of time. But both the speakers, they have covered the issues very nicely and elaborately, and I would like to make few points. The first point is in respect of proviso to section 215. There are confusion among the assessing officers. They are applying this proviso in respect of educational institutions also, but the circular has made it very clear that it is applicable when the object of that institution is in respect of any other object of general public utility only. Suppose the object is education, then it is not applicable. So we have to explain to them that if, in such a situation it is not applicable. Like suppose educational institution is having that hall and they are giving it on rent, it cannot fall under that proviso, because the object is not exclusively any other object of general public utility. And second point I would like to make, that some of the speakers, they have suggested that Bombay Public Trust Act should be amended. But I am scared. Whenever this amendment is there, they will put in lot of penalty, prosecution and all these things. So we should not go for all these things. Thank you.
Okay, it's time for vote of thanks. I know you guys are willing to run for the tea breaks. I'll keep it very short. We would like to thank Mr. Savla and Gautam Nayak, sir, for educating all of us, and I believe they have cleared all the doubts pertaining to the taxation aspects of the charitable trust, as well as the registration under section 12AA ATG in those. So can I please have a round of applause for both the speakers? And now people can run for the tea break. There are 5 minutes. Then we'll be back with Anil Sathe, sir.
Friends, since morning we have been discussing various aspects of charitable trust, the formation, registration, ATG, taxation, and now we come to the last session of this today's seminar. And I am aware that as we have very limited time, so I will not be taking much of your time. We have with us chairman of this session, Arvind Bhai. And friends, since we started studying for chartered accountancy, and even before that, Arvind Bhai is the person who have been teaching us taxation of charitable trust. I think it is more than 50 years. Friends, in this session we have with us Mr. Anil Sathe, past President of Bombay Charitable Society, who will be speaking to us on Foreign Contribution Regulation Act. Everybody now talking about foreign funds. How much foreign funds your trust has got, your संस्था has got, विदेशी हाथ कितना है उसके अंदर में. So now we will be talking about that foreign funds and the regulation thereof. May I request Ashok ji to please introduce today's speaker.
Respected Arvind Bhai, respected seniors and friends, I have a pleasant task of introducing our good friend Mr. Anil Sathe. He is the past president of BCA. He is a regular speaker at various professional organizations, writes various articles in various professional organizations. He is lecturer in Department of National Academy of Direct Tax, Nagpur, and also lecturer at Jamnalal Bajaj Institute of Management. He is a panel member of the Charitable Trust Clinic at Bombay Chartered Accountants Society. With this, I request you to welcome Mr. Anil Sathe with loud applause. And before I request Anil Sathe, I will request Arvind Bhai to offer a memento as mark of our love and remembrance. Mr. Anil Sathe, please.
Friends, please excuse me, I have reduced the time of Anil Bhai by 10 minutes and just
Chairman Arvind Bhai, Govindji, Ashok, Sharmaji, Suhas, we are in the 2020 arena and we are now in Duckworth Lewis. So I have exactly 35 minutes to go and substantial area to cover, but I think the organizers have enough confidence in my ability to achieve the target even in that time. So with that, straight away let me get into the topic. We are dealing with Foreign Contribution Regulation Act. In the morning and right through the day, you have looked at the Income Tax Act. In 1 minute, I'll tell you the difference between the Income Tax Act and the Foreign Contribution Regulation Act. That is administered by the Finance Department. This is administered by the Home Department. The Income Tax Department brooks argument, the Home Ministry does not. Because if you argue, you will end up in a position or you end up in a location where you may have eminent company but not necessary comfort. So therefore, please bear that in mind, that you are dealing with a regulatory statute and not a charging statute. And therefore, when you interpret any provision of FCRA, read the rules. The paramount intent of that particular provision, be it in the Act or the rules, has to be borne in mind. If you remember that, I think many of the questions that you will have in your mind will get answered. Doesn't work? Okay, sorry, okay, fine. This is the scope. It came into existence on May 2011. You have the rules which came in from 1st May 2011. The Act was passed a little earlier, but it came into force from 1st May 2011. The avowed object of the Act is to regulate the acceptance and utilization of foreign contribution and foreign hospitality by certain individuals or associations or companies, and to prohibit acceptance and utilizations of foreign contribution or foreign hospitality for any activities detrimental to national interests or for matters connected therewith. So, across the board, what is going through the minds of the officials is national interest. So therefore that national security and national interest, and that is something which you need to remember. The Act extends to the whole of India and also applies to citizens outside India, associates, branches, subsidiaries, etc. So therefore, to that extent where it operates in regard to foreign citizens outside India, it will have what we call extraterritorial jurisdiction. Now, it overrides FEMA to the extent there is any inconsistency between FCRA and FEMA. FCRA will be applicable. The general principle that a special statute overrides the general. The definition of foreign contribution. It's there with you. It includes anything in the sense that it includes currency, whether Indian or foreign, any contribution in cash or kind, or receipt of even a security. Contribution received from any person who has in turn received it from foreign source. I'll spend a minute on that, because as there are situations where we are basically chartered accountants, so whenever we look at a statute, we look at sidestepping it. And as my warning at the initial part goes, this is not a statute to be sidestepped, except with the peril I just mentioned. So if you want to land up somewhere where, then only you sidestep the law, otherwise you don't. Contribution received from any person who has in turn received it from foreign source. So therefore, often people ask me that, alright, you receive it, a resident receives it, and thereafter passes it on after an interregnum. If the intent is only to act as a conduit, it is not permitted. Even it lands up in the hands of the resident who later on passes it, there is a one-to-one correlation, he acts as a conduit, it still amounts to a foreign contribution. Remember that. The interest accrued on the foreign contribution deposited in any bank or other income derived from FC is also the foreign contribution. This definition is extremely exhaustive, and let me tell you that there are certain situations which we tend to overlook. For want of time, I will not get into the depth thereof, but if you fall within the prohibited category specified in section 3 and you thereafter receive a foreign contribution from a relative, also you have to intimate within 30 days thereof any contribution from a relative. If you fall within the prohibited category and you receive a foreign contribution of in excess of 1 lakh, you have to intimate. We are coming to charitable trust a little later. What it excludes, foreign contribution does not include gifted for personal use where the market value is less than 25,000, received from foreign source by way of a fee, including fees charged by an education institute. So the simple proposition is that if the contribution is received in the course of carrying on your regular activity, for example, a coaching class receives fees from a foreigner, that in their hands is not a foreign contribution. So something which you receive in the course of your regular commercial activity, that does not amount to a foreign contribution. Foreign contribution is specifically received for the purpose of spending for the object which is normally guided by or normally intimated by the contributor. So that is normally the position. Anything that is received in your normal course activity would not be treated as a foreign contribution. Definition of foreign source. Now this is important, because this is where quite a few questions emanate. A foreign source is defined to mean government of any foreign country, international agency other than United Nations. So you have on the Home Ministry website a list of institutions which do not qualify or are not foreign source. All the UN entities, in the sense we call it the UN family, the WHO and all those institutions, there is a list of I think 40-45 institutions. They do not qualify as a foreign source. Next important is a foreign company or any other entity incorporated outside India is a foreign source. And the next category, this is extremely important, domestic company in which more than 50% nominal capital is held by a foreign company, foreign trust, foreign citizen, or any other entity incorporated outside India. Now this is where possibly when you receive the contribution you would not know that whether it is a foreign source or not, because it is possible that the company that you receive the monies from has a holding of foreign citizens or foreign institutions. To overcome this difficulty, and now this is going to multiply for the simple reason that you have a situation of CSR now coming in. So corporates will now be contributing. How do you overcome this? In our office, where we receive a contribution from a corporate, we follow a principle of obtaining a declaration from that corporate that they do not fall within this category. Because otherwise you have no means of actually knowing. Once you do that, you are out because you have then taken due care. Remember this very important thing is that in this statute, if you establish beyond doubt your bona fides, many of your problems will be overcome. The moment you try to sidestep or circumvent a provision, you are looked at suspiciously. That must be borne in mind. The next situation is, this question is again asked on many a time, is that whether NRIs are included. Non-resident Indians do not qualify as foreign source. Question number 8 of the FAQs. However, PIOs do. So therefore, if your relatives have acquired foreign citizenships, which many of them actually have, then they would be treated as foreign contribution for the purposes of FCRA. This needs to be borne in mind. Non-resident Indians, of course, as long as they hold the Indian citizenship, would fall outside this. Prohibited from accepting donations. Section 3 of FCRA prohibits a list of persons from accepting foreign contribution totally. So that prohibition is totally, save and except the exception of Section 4. So these categories are not entitled to accept a foreign contribution, which includes a correspondent, columnist, cartoonist, editor, owner, printer or publisher of a registered newspaper. So if I am the editor of the Bombay Chartered Accountant Journal as well as the editor of the Chamber Journal, would not be entitled to accept a foreign contribution unless he, along with that foreign contribution which he has to declare, gets a certificate from the registering authority that the publication does not constitute a newspaper in terms of the Press and Publication Act 1867. So therefore, unless you have that, why I am pointing this out is that if your institution, while it seeks registration under FCRA, is in the activity of publication of periodicals, then you need to attach to your application a certificate that your publication does not constitute a newspaper. Because if it does, your application will not be accepted. This is important. So all others, of course, are judges, government servants, etc. They are also not entitled to accept a foreign contribution. Save and except, as I said, Section 4 permits them to do so. Other than that, these specific people are not entitled to accept any foreign contribution, which now includes organizations of political nature, members of any legislature. And interestingly, legislature here is defined very widely, which includes even a municipal corporation, not legislature as we understood. Even municipal corporations in terms of Article 241 of the Constitution are included herein. Alright, these are the prohibited categories. No problem. Sorry. Go back, okay. no person resident in India, no citizen Indian resident outside India shall accept foreign contribution or agree to acquire any currency from a foreign source on behalf of any political party or any person referred to in subsection 1 of section 3. Deliver any foreign or Indian currency accepted from a foreign source if he has reason to believe that that person will deliver it to a political party. Basically, section 3 prohibits foreign contribution to political parties. The subclause 2 and 3 thereof provide that if a person seeks to act as conduit and accepts a foreign contribution for the purpose of delivering it to a political party, or has knowledge that the person to whom it delivers will forward it, that also is prohibited in terms of section 3. Now, there is a procedure to notify a political organization of political nature. I am just spending 2 minutes on that because the central government, on the basis of activities of the organization or the ideology propagated by the organization or the program of the organization or the association of organizations with the activities of any political party, may specify whether the organization is of political nature in the official gazette. There are guidelines prescribed for that, and the guidelines mention, just look at the 4th bullet herein. If the objectives stated in the memorandum of association or activities gathered through other material evidence include step towards advancement of political interest. Experience tells me that if your memorandum of association is loosely worded, whereby agitational methods are permitted, then you have the danger of being treated as an organization of political nature, in which case foreign contribution registration will not be granted. So when you draft your, particularly in situations where you are looking at an activities affiliated to trade unions, incidental to trade unions, and activities of that category, you tend to draft your memorandum in a particular way. Please take care that this may at some point of time result in your not obtaining for a FCRA registration. Now, let's quickly look at the process for registration of registration for acceptance of foreign contribution. There are two types of shall we say registrations which you can obtain. One is of course a registration per se, for which you file FC3, or you may take a one-time prior permission for a foreign contribution. The second bullet, prior permission obtained under FCRA 1976 shall be deemed to be registered or granted prior permission and shall be valid from 5 years from 1st May 2011, the date on which the Act came into force. So therefore, if your clients are old associations or entities and have obtained the registration, please note the date in your diary. On 30th April 2016, that registration shall cease, and the procedure for obtaining renewal is very specific. You require to apply 6 months anterior thereto, so you must apply by 1st November 2015. So, please note this, that if you have obtained registration under old FCRA and that is subsisting, that expires on 30th April 2016, and you will have to apply for renewal 6 months anterior to that expiry, which is 1st November 2015, because if you don't do that, then certain very serious consequences flow. Where to and how to apply for registration, prior permission and renewal. Now, the application can be downloaded, as I said, from the website, reasonably, shall we say, helpful website, though the people who administer this in Delhi are not very helpful. The website is reasonable, I would say, compared with all other websites. FC3, as I said, is the registration. FC4 is the prior permission. The application form is to be filed online. Now this is extremely important, because once you fail this test, there could be serious problems. Application to be filed online and later printed form to be submitted along with documents physically within 30 days of your online filing. If you fail to do so, that application is deemed to have ceased and you cannot make a fresh application for 6 further months. So therefore, be extremely careful of your online filing, as well as ensure that the physical documentation is received by the concerned authority within 30 days. Now, the application is ordinarily processed within 90 days. Our experience tells me that 90 days is not normally adhered to. You do take time, but if your form is very accurately filled in, our past experience shows that between 3 to 6 months you do get registration. So therefore, what you have to ensure is that your form is absolutely correct in all respects. If that is the case, then I think you have no problem. What are the normal guidelines which you should follow? The guidelines are that first, you require registration under a statute. In the sense, you must be a trust under the Bombay Public Trust Act, or at least a trust wherever a local statute applies to you, you must be registered therein. You may be a society registration under the Societies Registration Act, or you may be a Section 25 company. If you fall within any of these 3 categories, then your task is much simpler. Not that you don't get it otherwise, it becomes more difficult. The simple rationale to that is that once you have that registration, they presume that your charitable object or your charitable nature has already been tested, and therefore you don't need anything further. Next, you must have been in existence for 3 years. So if your trust is very new, you would necessarily have to go for prior permission. And you must have carried out a reasonable level of activity, which means that you should have spent for your objects in that anterior period of 3 years at least a sum of rupees 10 lakhs. So that is something which I have not put it on the website, in the slide, but you can go to the website. Answer to question number 26 of the FAQs will deal with this proposition. You can also look at section 12.4 of the FCRA, which will also deal with these situations. One more care that you need to take is that ordinarily none of the office bearers or members of the executive committee ought to be a foreigner. If you have a foreigner who is there, though they will not explicitly say so, your registration will become difficult, and if that foreigner is a citizen of Bangladesh, Pakistan, China, Nigeria, you're out. And as I said, the Home Ministry does not brook any argument. That's it. They will simply not reply. They will simply say that we will not register you. National security of paramount importance. So, at least at the stage of application, you cannot have any of those people. That's somebody may say that how do you treat a foreigner as a prohibited, but that's how the Home Ministry looks at it. Then, as I said, another important aspect that you need to look at is that there is a list of categories, list of items which is exempted. That power the the ministry has by virtue of section 50 of the Act, and they have notified that all organizations which are established under a central or state act whose accounts are required to be audited by the CAG are not required to be registered under FCRA. So if your accounts are audited by the CAG and your incorporation is under the central or state act, then in that situation you don't require FCRA registration for accepting a foreign contribution. Then we look at the various differences between prior permission and registration. The fee, there is a very nominal difference of 1,000 and 2,000, and therefore institutions which are expecting to receive foreign contributions regularly, they would be well advised to look at registration only, unless of course the other tests which are prescribed by the guidelines are not satisfied. Otherwise there is very little difference, because once you receive registration, then it shall be granted for 5 years. The only thing is that in prior permission they don't communicate the reason for denial, though technically speaking the law provides for providing a copy of the reasons for those denial, but our experience tells me that that is very rarely provided, at least in the case of prior permissions. The fee payable is by banker's check or demand draft drawn in favor of Pay and Accounts Officer, Ministry of Home Affairs. Now, another very important thing is that you require to have an exclusive bank account. FC should be received only in the branch of a bank as specified in application for grant of registration certificate. Depositing the same in any other account, section 17 provides that that is an offence. So therefore you cannot do this. I will come to compounding, which is extremely costly. So therefore be sure that you have opened an account prior to the application. That of course is required in the application form itself, and all those deposits are made in that account only. Why I am saying this is because often we find that errors are made in this regard, and though as of now the Home Ministry officials don't look at it very seriously, I am sure that in times to come they will, because these institutions are now under a scanner. You have the Income Tax Act already looking at them seriously. Days are not far whether then this also will be looked at. Now for utilization of funds, one or more bank accounts are permissible. Intimation of such opening accounts is to be given within 15 days. There no prior permission is required, but suppose you have deposited the money and you want to spend it at various places across the country, you are entitled to open a separate account only for the limited purpose of transferring that foreign contribution for the purposes of utilization to those accounts. Now, one important thing is that inter-account transfers between these accounts is not permitted. The FAQ to question number 21 explicitly states so. So therefore, you transfer your foreign contribution to that specified account. From that account, you only spend, you don't transfer from that account. In the event that that money is lying unspent in that account, you transfer it back to your main account and then to another account. There is interbank accounts, transfers are not permitted in terms of, because they look at, it should not be this position, but they look at every transaction reasonably suspiciously. So therefore, you do something which is not fitting within the rules and regulations, you had it. So be careful. Any organization receiving funds over rupees 1 crore. Any organization receiving funds over rupees 1 crore, the bank will inform the central government within 30 days of such transaction. So if over a period of time any entity which has obtained registration receives rupees 1 crore, then it will be intimated by the banker to the central government. Rule 16(3) provides for that. Further, the regulations also explicitly provide that if you receive a foreign contribution and you are not registered under FCRA, the banker is required to intimate such contributions also within 30 days. So therefore, if you receive monies, the clear instructions of the Home Ministry are that if a foreign contribution is received by an entity which does not have registration, the banker has to intimate that within 30 days, and the banker has to ensure that that contribution is not utilized till that particular registration is received or further action is taken. The organization shall also place the summary of data on receipts utilization in the public domain, so you have to place it on a website. Here, of course, they are not very strict with this compliance because they have not defined as to how it is to be placed in public domain. The central government shall also display or upload the summary data of such persons on its website, though to my knowledge that is as of now not available. Prohibition to transfer FC to other registration on unregistered persons. As I said, you cannot transfer this. There is even inter-account transfer is not permitted. You cannot transfer the foreign contribution to unregistered persons. So therefore, you must utilize the foreign contribution only by yourself. If you want to transfer it to other person, even if he is registered, you require prior permission. The central government may then permit a transfer of 10% of the total foreign contribution received. Donor shall not transfer foreign contribution without prior permission, and this transfer has to be reflected in FC6. The restriction is to utilize the foreign contribution for the purposes that you have received. So, when you receive a foreign contribution, you will require to register it for the purposes for which you have received it. You cannot utilize it for any other purpose. You are not entitled to invest it or use it for any speculative activity or business. They have defined what speculative activities are, which includes investment in mutual funds or shares obviously, but investments in mutual funds are also not permitted. So therefore, there may be a situation where 11(5) permits you an investment, but FCRA does not permit you an investment in mutual funds. Further, important, and this is typical of chartered accountants. I was at a seminar where people asked me that specifically futures and options is not mentioned. So, as I told you, you look at the spirit, and the spirit clearly tells you that no speculative activity. Futures and options by their inherent nature are speculative. You are not permitted to deal in that. Absolutely. Now, there is one further restriction. Shall not use more than 50% of the contribution towards administrative expenses as specified in the rules. The object is that ultimately this contribution should reach the purposes for which it is meant. That is the intent, and therefore you cannot spend it for administrative expenses, because otherwise you will have the entities akin to BMC, because BMC spends 78% of its budget on salaries. So therefore they said you cannot spend more than 50% then on salary. They have given a list. I don't need to get into that. The only saving is that expenses directly related to the stated objective of the welfare oriented organization shall be excluded, in the sense that if you pay salary to a person who works on a project for which you have received a foreign contribution, then obviously that is not treated as administrative expenses, that is treated on objects. one small question is often asked to me in this regard as to what happens to capital expenditure. In the sense, suppose you construct a particular building for the purposes of housing your personnel who are then going to run the charitable trust. Will that be within the limit of 50%? To my mind, when you are looking at expenditure, the word expenditure used in the context of administrative expenses is revenue, not capital. So therefore, if you are utilizing it for creating a capital asset which would be benefit to the organization over a period of time, to my mind, it would not be included. Suspension of certificate of registration. This can be done for a period of 180 days. Reasons are to be recorded by the central government. If such an order of suspension is passed, up to 25% of the unutilized amount can be spent with prior approval of the central government. Balance 75% can be spent only when the suspension order is revoked. Cancellation of certificate of registration. The central government, after making inquiry, may cancel the registration of the holder of certificate for these a variety of these reasons. And look at the fourth bullet therein, important. Has not been engaged in reasonable activity in the chosen field for benefit of society for 2 consecutive years. So if you have just collected the foreign contribution that is lying as an investment, then you are liable for cancellation. Though as I said, as of now the ministry is not active. The latest cancellation list on the site, to my knowledge, is of 12th April 2009, and it has 45 institutions whose registration has been cancelled. Central government, of course, gives a reasonable opportunity of being heard, etc., etc. Custody of foreign contribution in this case shall rest with the exclusive FC bank account of the holder. Now, maintenance and audit of accounts, where all of us will be involved. Now, every person who has been granted registration shall maintain a separate set of accounts and records exclusively for foreign contribution, which means that annexed to your account of the institution, there must be a separate account dealing with the foreign contribution. Every person who receives foreign contribution shall submit a report in the prescribed form FC6, that is to be submitted by 31st of December. And remember that this has to be accompanied by the bank statement, which bank statement is to be certified by the banker. So mere bank statement is not sufficient. A bank statement which is certified by the banker is essential. Foreign contribution received by a candidate for election, that also has to be reported. If you look at the earlier slide, I said a candidate for an election cannot accept a foreign contribution. Very correct. But when you are nominated for election, I am saying because some of you may be for Aam Aadmi Party. So if you have accepted a foreign contribution within 180 days prior to the nomination, that also you must declare in FC9. So therefore, within 45 days of your nomination, you require to intimate any foreign contribution which you have received 180 days prior thereto. Annual FC6, specific foreign, the specified account, it relates only to Article FC7, Securities FC8, and shall be duly certified by a chartered accountant. Accounting statements referred to above shall be preserved for 6 years. The last bullet, again very important, nil report shall be furnished even if no foreign contribution is received during a financial year. So therefore, even if you don't receive a foreign contribution, you are required to file a nil return. Violation of FCRA. And the most common violation is delayed submission of FC6. From 12th April 2013, they have specified in terms of section 41 the penalty thereto, which is for 3 months of delay, 2% of the foreign contribution or 10,000, whichever is higher. Up to 6 months, 3% of the foreign contribution or 20,000. After 6 months, 50,000 rupees and 500 per day of continuing default. So therefore, this is the cost. Please beware that apart from this, this is only a penalty. Should you continue to violate, of course, as I said, you can be prosecuted. Section 37, the residuary clause, deals with this, offences and penalties, which making false statement, section 35, then 33A, section 34, article or currency or security obtained in contravention of prohibitory order, imprisonment, violation of contravention or the other provisions, 5 years, and where no separate punishment is provided, imprisonment which may extend to 1 year or fine or both, the residuary clause. So therefore, this is where you can, compounding of an offence, acceptance of foreign contribution in cash or check draft kind without registration is an offence that can be compounded. Section 41 of the Act permits compounding. Application on plain paper with 1,000 rupees by check, that is what is required. Offence can be compounded, but I presume you will not need compounding because all of you are keen on compliance. Quantum of compounding is, now remember, see where check is not deposited also. So you accept a foreign contribution, check comes to you, you have not even deposited it, that also amounts to a violation. Compounding, rupees 10,000 or 2% of the foreign contribution involved. Where check is deposited, 25,000 or 3% of the contribution. Then there are other acceptance and utilization of foreign contribution for purposes. Even if you accept that foreign contribution, have spent it for the purposes for which you have specified, even then you are liable for 5% or 1 lakh, whichever is higher. In kind, again 10% or 2% of the value of the contribution. What is the role of a chartered accountant? You have to verify whether associations are eligible to receive foreign contribution. If not, they should not receive them. To guide these organizations to ensure that they utilize the foreign contribution in the manner that they are required to, assist in proper maintenance, and here is where there are a lot of violations that are committed. We are extremely short of time, but please ensure that you really do a good job of this, because if you don't, apart from the trustees who will suffer, you also may suffer. And to ensure that annual returns are prepared in accordance with FCRA, I have complied with the mandate of the chairman. I have exceeded by 4 minutes. Thank you.
Thank you, Anil. In fact, you took exactly 36 minutes. So one can say in 2020 format, in 1 over 6 sixes. So you have become the champion of this 2020. Thank you, Anil, for summarizing important provisions of Foreign Contribution Regulation Act, highlighting do's and don'ts, providing sufficient clues to the participants for getting registration and how to get contribution with sufficient amount of warning. Friends, now we have with us Arvind Bhai. And as I said, Arvind Bhai is guiding all of us for last more than 50 years on these provisions of charitable trust. May I request Arvind Bhai to conclude today's seminar and bless all of us.
No, I didn't sit through the seminar for the whole day to offer this 5 minutes remark. But as I sat through the talk given by Gautam on 215, I had certain ideas, and therefore I thought I may share them with you. Firstly, I may mention that in my synopsis given in the morning, there was one short paragraph on the question of 215, where I had suggested one more interpretation, that there is a distinction between the objects of the trust and the advancing the objects of general public utility. And I am not talking out of the head. It is taken from the Supreme Court judgment given way back in the case of the Chamber of Commerce, which I have quoted in my synopsis. Be that as it may, I have got a theory which so far nobody has accepted, but I hope one day it will be accepted, that the correct interpretation of this should be such that it will not create the tremendous effect on the trust by losing the revenue in the shape of taxes. The intention of the government was that if you carry on business, you must pay the tax. And my friend Jal Dastur always mentioned that why, if I use my business income for charity, I should be taxed. Yes, but now the philosophy behind the section is that if you carry on business activity, you must pay the tax. The question is, how do you determine that whether you are carrying on business activity or not? And therefore, one of the propositions which I have relied on seriously is that you must have a distinction between the two. If your object itself involves some business activity, then it should not be liable to tax even though it involves commercial activity. That should be the way it should be interpreted. But if you carry on a commercial activity which has no connection with your objects, then certainly you are liable to pay tax. In other words, if the business is settled on a trust which divorces the objects, then it should be liable to tax. Be that as it may, as I mentioned, I don't think there is any chance of the interpretation being accepted. But as I mentioned to you, as I listened through the jet speed oration of Gautam on the question of 215 and the various cases which he discussed under section 215, I thought, how is this going to help us? Because on the same set of facts as analyzed at length by him, one bench or one judge might come to a decision that no, your dominant motive was not to carry on business. Your dominant motive was to have charity. But another judge on the same facts can come to the conclusion that no, your dominant motive was to carry on business activity. Therefore, there is no objective test which can be laid down. It's all principles. And therefore, I think we are walking on the razor's edge as far as this section 215 is concerned. And you must take all these cases with a pinch of salt, that in spite of all your expert knowledge, arguments, etc., still the judge will come to the contrary decision, and in another case, another judge will give a favorable decision, the facts being the same. And therefore, I think we should be cautious in trying to plan for the cases like this. And finally, I think I remember what Mr. Palkhiwala had mentioned in one of his budget speeches, and I would like to end with that. He said that there was a case going on in the High Court about the distinction between capital expenditure and revenue expenditure. And the counsels on both the sides explained at length as to when it is capital expenditure and when it is revenue expenditure. At the end of the day, when the court was about to rise, the judge said, yes, I have now understood. If it is capital expenditure, it cannot be allowed. If it is revenue expenditure, it must be allowed. So that is how the law is. Thank you.
Thank you very much, Arvind Bhai. You said that about the courts that judge may be accepting one argument, sometime he will be giving another judgment, whether in favor or disfavor. I think it all depends upon the counsel who are appearing before the judges and how the counsel is arguing their cases, impressing upon the judges, and based upon that, judges are giving their decision. With that, friends, may I request Suhas to propose vote of thanks. Friends, we are thankful to both the organizations, Chamber of Tax Consultant and Bombay Chartered Society, who have been organizing this kind of program every year for the benefit of the charitable trust, trustees and the people connected with Charitable Trust. So ask please.
Yes, a pleasant task of offering our vote of thanks. First to Shri Anil Sathe. In a lighter sense, I must say, Anil sir, that your starting and end was very frightening, wherein you mention about some eminent company at some uncomfortable places. However, it was an excellent analysis of FCRA provisions with very specific mentions of timelines and procedures involved, a wholehearted sharing of knowledge and practical experience in the field. In 2020 match, you played like MS Dhoni in full form in last few overs. Thank you very much for following a very strict timelines without sacrifice.